You know, the 1991 budget speech of Dr. Manmohan Singh is very often regarded as a watershed moment. Actually, it was a watershed speech, but it wasn't a watershed moment, because the most important policy changes which constituted 1991 had already been announced. The devaluation was done before the budget. The trade policy changes with which I was involved, Mr. Chidambaram was then the trade minister, I was commerce secretary, that was also announced before the budget. The industrial policy had been announced 5 hours before the budget. So frankly, the budget speech went to the public and said, look, we were in a crisis, we've done all these things.
Right.
And now I'm giving you the reason why we are doing it.
Right.
Since then, budget speeches have been converted into something that's going to announce a policy change. I think policy changes should be made independent of budget speeches.
Sure.
And the best budget speech would be one which says, you've already heard the policies we are going to follow. Here are the numbers that have to be fitted into the budget. And then the rather matter-of-fact presentation of revenues and expenditures.
Sure.
That's what we should do.
Sure.
By the way, if we get that, I think it will be a real breakthrough.
The Honourable Finance Minister and the Honourable Prime Minister have steered the ship really, really well through these very difficult times. So I think they just need to stay the course. And there are 3 or 4 areas which they have prioritized, and I think they should continue to do that. Number one, we have to continue to provide support to vulnerable populations.
Okay.
We've done that through the Pradhan Mantri Garib Kalyan Yojana, we've done that through the fertilizer subsidies, we've done that through a big support for Narega and so on. So support for vulnerable populations, which of course has driven up our fiscal deficit, but is still required given the commodity price shock that I spoke about earlier. So that's number one priority. Support for vulnerable populations. Second important priority is continuing on the reform measures and really putting in place a very forward-looking industrial policy. And that's coming through the PLI scheme, that's coming through our commitment to climate change and what we're trying to do to green our economy. So I think that's the second area, which is really a very forward-looking industrial policy. The third area, of course, that the government has been emphasizing, correctly so, has been significant capital expenditure. So capital expenditure over the last year or two has gone up by 1 or 2% points of GDP, which is a substantial number. And that, of course, has meant that many sectors of the economy, like construction, like steel, like cement, have done extremely well because of the infrastructure spending that the government has done. And then finally, what we've also tried to do through all of this is to ensure that we have a happy balance between growth and inflation, right? So it's the macroeconomic management, looking at the currency, looking at the fiscal deficit, looking at, of course, where we are with respect to inflation. So here again, we have to stay the course. And of course, the Honourable Finance Minister just mentioned in Parliament that she's committed to the fiscal glide path. We have really deftly and very, very, competently managed all of this so far. And I think that's what we should do coming up in this budget.
Ahead of budget, because it comes in the face of a lot of events, right? There is a fear of global recession, there's a fear of slowing economy, rate hikes. You put all together, and in between of that, we have budget. What are your expectations, and where do you think government will put its thrust in right now?
See, I don't know what all budgetary proposals will be, because her hands are also tied. There's not much, because indirect tax has gone to GST, and direct taxes where she can play with the rates here and there.
Right.
So some proposals can come there. Otherwise, GST, they keep tinkering through the year.
Right.
So I don't expect much out there. In direct taxes, I think it will be not much of a, some proposals will be there, but I don't think it will be significant for the place, because they want to stabilize the economy, they want to grow the economy.
Right.
So what will be the growth boosters they will give, only time will tell. But I'm not expecting anything from the budget in terms of any major changes in any aspect. There's some tinkering here and there, yes, but not, because they want to have the growth continuing.
Right.
The government's intention is clearly to see that 7-8% growth comes.
Right.
We grow at 7-8%. So what they will do, maybe they can allocate the infra spend a lot more, because they can cut on subsidy now. Now
Right.
the economy is broadly out of COVID stress. Broadly, I would say. So you can cut at least 60-70% of the COVID spend by way of subsidy, food and all. In 23-24, and put that money into the infra.
Fair enough. And also, Mr. Raghavan, a lot has been spoken about the LTCG, right? Everybody has been spoken. There is a compelling case.
Every budget
we talk about it, and every budget we get disappointed because nothing comes on board. What do you think? This time around, it's going to be any different? Any tinkering
I don't know
coming
what
around?
they'll do, but they should not do anything. That much I can tell you. On the shares and all, because people have sold things based on instability of rates and what is long term, what is short term and all. Now, if you keep playing with the duration or rates, I think it vitiates the investment environment. If I have present in my calculation 1 year long term capital gains and say 10% plus a charge as a tax rate on the long term. Now you say that it is going to be less than 2 years or 3 years is 3 years is going to be your long term, short term. Then that my tax rate goes from 10 to 15. So that vitiates the thing, They should do it only if it is necessary because they understand.
What is the market expectation at all with respect to the budget?
I think India is in a very good sweet spot in the world, which is hit by inflation as well as fear of recession. So market would expect that manufacture in India, theme which our Prime Minister Modi ji had initiated and now is gathering momentum, will get further impetus in this budget. Great opportunity for India for the first time. There have been lots of talks about India being alternative, but that was never feasible. But now most of the global companies that outsource, they're very serious about making an alternative to China. And in terms of scale in most of the manufactured products, China is way ahead. And therefore, even the slight increase also would be a significant delta for many manufacturing sectors. So I think one will be to continue the growth or to accelerate the growth in manufacturing with the PLI scheme and all those, whatever momentum has come. I think government will try and see that is carried forward. Also, I think there'll be the election is 1 year ahead, and inflation has impacted the rural India as well as poor people in urban India. Therefore, budget will try to do something so that the real income is maintained. So might give them some incentives, some benefits to farmers as well as poor people. that is something which is typically every government tries to do as a populist thing, but here I think there are more compulsions because of the inflationary impact that the lower income strata of population, whether it's agriculture or industrial, would have had. So I think that is the second thing that we'll see. Another thing, I think there'll be a huge focus on capex and investment. Because investment cycle and private sector capex also is showing signs of revival after a very long time. So government would try to incentivize that. And capex cycle revival and growth is very important to maintain the economic growth. So I have a feeling that there'll be good incentives and a investment layout for those capex plans as well.
Good morning. All eyes and ears in the next 2 hours from now will be on the Union Finance Minister, who will be presenting Budget 2023-2024, a budget that comes amidst the fear of recession, heightened inflation, 9th state election and general election in 2024. But don't you worry, we've got you covered with 14 exclusive gems which will help your portfolio shine. Hi there, I'm Nikki Marchandani, and in conversation with the head of Moneycontrol Pro Research team, Mrs. Madhuchanda Dey. Thank you so much for taking out the time.
Hi, good morning.
So I'm going to straight up ask you about the strategies and the themes that have been deployed for picking up these 14 stocks.
Yeah, as you rightly pointed out, the global backdrop is slightly shaky and the market is not in the best of the mood as well. So, the thing that the markets are looking for from this budget is clearly adopting a fiscal consolidation roadmap. And we are assuming that this budget is likely to deliver on fiscal consolidation. But having said that, there are other things also which the markets are looking at. Like there has been a step up in capital expenditure in the past two budgets, and the markets are certainly looking at continuation of the same. Also, in the same breath, the markets are looking at some step up in consumption, because as you rightly pointed out, this is a very important budget. This is the last full budget before the general elections of 2024. So some kind of a boost to consumption is also expected. And last but not the least, the market is also looking at the budget to give a fillip to employment, to give a fillip to manufacturing, the China Plus strategy, etc. So these are the broad premises on the basis of which we have constructed this 14 stock portfolio.
Sure, Madhu. Let's address them one by one in detail. Let's first talk about the rural consumption theme, which has been marred to an extent by inflation. Do you think higher allocation in rural consumption this budget would help? A, and also which stocks will look attractive in this space, given both the perspective of earning as well as valuation?
Yeah, that's a very valid question. The markets are definitely looking up to the budget to allocate more to generate more employment in the rural areas, and to so-called whatever populism happens in the budget, they're expecting that will be directed towards the rural areas. Yeah. Having that in mind, of course, we need to mention that inflation is gradually cooling off, which is again a good news from the rural consumption perspective. With that backdrop, we have kind of broadly picked up 5 different stocks from 5 different baskets. The first stock that I would like to talk about is something which has always hogged the limelight in every budget, and that is housing finance. And here we have picked up the stock from the affordable housing finance space called Aavas Financiers. So they are pretty well entrenched in the self-employed category. This is not something which the big banks typically do. And close to 70% of their portfolio is housing loan. Obviously, their net interest margin is way higher than the competitors in the housing finance space. And they have a hawk eye on the non-performing assets, so they have very good asset quality. In fact, they have braved the pandemic also with flying colors. And they have a ROA of close to return on assets of close to 3.5%. Although the headline valuation looks a little expensive, but for the quality and for the earnings outlook, this is a great stock to own.
Sure.
So the other stocks we have are one from the discretionary and another from the non-discretionary consumption space. First, let me talk about the non-discretionary, and no price for guessing that. That's Dabur.
Right.
It has a very high exposure to rural areas, and what we like also about Dabur, in addition to the budget push, is the fact that Dabur is really cementing its position in all the categories that they are present. In fact, they are gaining market share in 90% of their product portfolio. And with the cooling off of commodity prices, we expect the gross margin and the operating margin also to get a boost. So again, Dabur, a good stock to own. Then the other stock, if you think rural in India, how can you not think about Hero MotoCorp?
Sure.
Yeah. So this pandemic-induced preference for personal mobility continues. So that is a theme that's going to stay. On the top of that, if the rural earnings are going to be even a tad better, that's going to give a fillip to demand. And as I have always spoken about this, the softening of the commodity prices giving a fillip to gross margin and operating margin, that's also a story which is going to play out beautifully for Dabur. The other stock that I would like to talk about linked to rural is Visakha Industries. Again, this asbestos player. So anything to do with rural, they definitely gain, and they are now getting into new businesses like solar rooftop.
Sure.
So again, good earnings traction is expected from there as well. And the last stock that I want to talk about, also I need to mention about Visakha. Visakha has corrected way too much, so the valuation is quite attractive and there's quite a bit of headroom ahead of us. And the last stock on this theme that I would like to talk about is RELAXO Footwear. Not a great going for this company, honestly, but few things makes us positive. This company was badly impacted because of a hike in the GST slab,
Right.
which impacted demand. On the top of that, this whole inflationary effect, which impacted urban as well as rural India.
Sure.
So it was not in a very comfortable position. But with demand normalization, and now if we expect that the budget is going to give a kind of a fillip to rural consumption, I think demand is going to come back gradually. This company is already benefiting from this trend of shift from the unorganized to the organized sector. We have seen across consumption categories that that's a shift which is happening,
Sure,
especially on the economy side of the business, on the entry-level products. This big shift is happening. So RELAXO stands to benefit from this long-term trend. And finally, last but not the least, there is a correction in rubber prices,
Sure.
which is going to be helping their gross margin and the EBITDA margin eventually. So again, the stock is very close to its 52-week low, and there's a headroom.
Fair enough. Looks like a value buy, not a recommendation of any sorts, but clearly independent research that the Pro Research team has conducted thus far. Just, shifting the focus a little bit from, the rural consumption theme to private capex and investments. Economic Survey also spoke enough and more about the private capex yesterday, which is yet to come in full swing. With that in the background, which are the stocks and the counters you think are attractive at this point of time, both as usual from the earnings as well as the valuation perspective?
So today is actually a good day to talk about capex, because for the next 8 hours, the word that we are going to hear the most is capex. Capex. Okay. So last year and the year before last was great as far as the budget's delivery on the capex front is concerned. Sure. And definitely hopes are high that that momentum is not going to reverse.
Right.
And if that momentum accelerates, that's really good news for a whole lot of companies. But even without budget giving a very overt push, we have picked up some capex-linked stocks which are going to deliver for investors for the next 1 year, given the kind of changes, given the kind of momentum that we see in the economy. I would just like to kind of draw your attention to what Larsen & Toubro said after its recent earnings.
Sure.
They have clearly indicated that they see green shoots in terms of capex, not only in terms of government expenditure, but also they see green shoot in terms of private capex, and that's really clearly good news.
Sure.
So the no guess for for the first stock in the investment theme, which is Larsen & Toubro.
Sure.
And the valuation is quite decent at 21 times FY24 expected earnings. And even in terms of some of the parts valuation, we still see upside in the stock. So to start with, Larsen & Toubro, definitely if you think about India, if you think about India investment capex, although they are venturing into information technology in a big way, but still 70% of their business is linked to investment in capex. So that stock is on the top of the radar.
Sure.
As we rightly were discussing about the possibility of private capex coming back, and we have already seen that some of these companies riding on private capex have started seeing very good traction in order books.
So Madhu, which are the other themes, counters in these themes that you're looking at?
Yeah, I'm just coming to the private capex theme. So on the private capex theme, the stock that we have picked up is Thermax.
Right.
Usually Thermax is a biggest beneficiary of the upturn in private capex, with both its businesses, energy, environment, especially in the current milieu, expected to do exceedingly well. While talking about capex, we cannot not discuss defense capex.
Sure.
In the current milieu especially, that is all the more important. The
Right.
geopolitics has changed in the past 1 year. So everyone is expecting the budget to have higher allocation towards defense and more towards defense capital expenditure. We got to remember that, the government has an overt policy of encouraging more indigenous manufacturing of defense. Although defense stocks have done their bit, and we have also been recommending them from last February ever since that geopolitical tension broke out, but we have a we have picked up a stock where there is great earnings visibility, that is Gardenrich Shipyard. The reason I'm telling you so is because this company is sitting on huge order book. They have visibility for the next 3 to 4 years. The good news is because of the pandemic, the execution suffered, but now the execution is picking up beautifully, and the commodity correction is also going to give them a fillip to their earnings. The other stock on the day of the budget we need to discuss, and we have put it also in our portfolio, is linked to railway capex, which is IRCON.
IRCON International, sure.
So, government has already, spelt out that they want to incur decent capital expenditure on the railway side, and on the most of these engineering companies linked to the railways are going to be a beneficiary. The reason why we have picked up IRCON is they have huge order book. They have visibility for the next 3-4 years, and as we spoke about in GRSE as well, post the pandemic, execution has picked up, gross margin pressure is waning, so yeah, a nice place to be. And the last stock, which is very interesting, something that we have recommended for a while, is a small construction company by the name of HG Infra.
Right.
This company is into mostly into the road space, and we know that of the investment that happens on the infrastructure space, a large part of it is in the road sector. But it is not road alone, because for the re-rating of the stock to happen, this company needs to diversify, and that has started happening. So now they are getting into metro orders, they are getting into railways, they are getting into irrigation, etc. And what is most important to remember about a construction company is the quality of the balance sheet.
Sure, Madhu. I would just like to cut in here and tell you that, sure, HG Infra has clearly been one of the counters or the stocks that has clear balance sheet. But moving on the focus now to China plus one theme, you think India is now at the cusp of being a global manufacturer? With that in perspective, which are the themes, which are the counters you think that the viewers can now be looking at ahead of budget?
Yeah, China plus one is a big theme.
Sure.
But unfortunately, so far, we have not really made the most of it as a country. So definitely expectations are there that the budget will give some incremental push to this theme. So manufacturing as a theme is definitely in focus, and we also have some of the stocks, like we have picked up this stock called Amber Enterprises. So they are into air condition manufacturing, they are an OEM, and they are very well entrenched with all the leading players. So now they are getting into other businesses also, like components, etc. So we think, the last 1 year has not been great for this company, but the results came out a couple of days back. Execution has clearly started picking up, and I think, Amber is again one stock that investors can look at seriously. With many other companies in the outsourced manufacturing space, either we are not comfortable with the valuation, or we are not comfortable with their margin profile or outlook. So, this is a good place to start, but I think there's a long way to go in terms of picking up companies from this particular theme. The other company I want to talk about, it's not strictly China plus, but it's kind of an import substitution. I think there will be a decent focus of the budget on this. That is a complex fertilizer player, and the stock that we are talking about here is Paradeep Phosphates.
Right.
Complex fertilizer is not something which is just a good theme to invest, but it's an imperative for India, because as we know that there's a nutrient imbalance in Indian agriculture,
right,
in favor of urea, and it's high time that that gets corrected.
Sure.
And we all know, because of the spike in international fertilizer prices, our fertilizer bill went through the roof last year, and with the cooling off of the prices, we expect the fertilizer subsidy to come down.
Sure.
And the government is definitely going to encourage use of more complex fertilizer to restore the nutrient balance. And Paradeep is in the right place. They have done an acquisition, so there is a capex, the capacity expansion story is there. And on the top of that, they are pretty well backwardly integrated, so they don't have much of an issue with respect to the raw materials. So all this puts Paradeep in a very strong place. The other stock which I want to talk about is a very interesting mid-cap. You can call it an auto ancillary, you can call it manufacturing China plus, whatever nomenclature you give, but at the end of the day, it's a good stock to talk about, and that is FIEM Industries.
Okay.
FIEM is a very strong player in the two-wheeler lighting space. But what is the the incremental fun about investing in this company is it's getting big into the LED. So LED adoption in India is going up by leaps and bounds. And in addition to this, this company is a strong play on the electric vehicle as well. They are very well entrenched with all the new electric vehicle manufacturers.
That's interesting.
And I'm sure this budget will also have a focus on electric vehicle, a focus on renewable.
Right.
So if you want to play that theme, FIEM is also a very interesting stock to look at. In fact, we feel that auto ancillary as a space is looking very interesting because last year, right after the pandemic, we saw there was a huge shortage of semiconductors.
Sure, Madhu. I think this one particularly looks really interesting out of the three stocks that you've laid out for us within China Plus strategy. But let's move on to our fourth theme in that case, which I think would be something that we'll speak enough and more during the course of the day, right? We're going to be talking more about the fiscal discipline and the gross borrowing number. With that in perspective, you think financials are still an attractive bet? Especially after the run-up that they've seen in the previous financial year.
But also the correction that we have seen in the recent times.
Sure.
Okay. So yeah, the mood has got completely upset in recent weeks as far as the financials are concerned. But one thing, if you say what is the prayer of the market at this point in time, I would say that is the government sticks to some kind of fiscal discipline and delivers a fiscal deficit in the vicinity of 5.9%. And should the government deliver on this, I think that is positive for the markets, that is positive for the bond markets, and that is positive for financials. So one stock which we want to talk about and something which has corrected and the valuation is looking extremely attractive is SBI.
Same old State Bank of India. The story still lasts for them.
But you look at the transformation that has taken place, in this giant. Credit growth is extremely robust, especially on the corporate side. They are way ahead of the competitors. Their credit cost has fallen to all-time low. Their slippage ratio in the last reported quarter was 33 basis points, coming from the largest lender in the country. And SBI has very decent subsidiaries also. I'm just talking from an investment case. Should the budget also not deliver on that magic fiscal deficit number?
That was exactly my question. What if the budget doesn't deliver on these themes? Will the stock, not a recommendation, but just the discussion that we've had, still hold true?
Yeah, I will first talk about SBI and then I will talk about the remaining stocks. So, the stock is trading at 0.9 times, and we need to remember that SBI has a very valuable franchise in the digital platform, which is YONO. And so that's a huge value unlocking potential that this India's largest lender has. And you are getting it at this kind of a very attractive valuation after the significant correction that it has seen in recent times. So again, SBI, a good stock to own from the long-term perspective. And your question is extremely valid. The budget might not deliver. Then are you saddled with these stocks? Not at all. These are absolutely high-quality investment companies, and you should actually add more should the market corrects meaningfully.
Sure. Let's cut into the finance minister and the pictures out there that have been coming in, just to give you a visual of how the big day is going to be shaping up. Looks like it's going to be a decent start, going to be with some enthusiasm out there. But let's actually get back to our discussion and figure out, if we could talk a little bit about how this has been moving out. There is a lot of chaos clearly, and I think all eyes now would be on the market's reaction, how that is going to be playing out, especially with the kind of valuations that we are looking at. You've done a piece giving and trend analysis of more than 10 budgets. Could you just take us through that?
Yeah, I mean, this is an empirical exercise that we did out of curiosity because, as you know, from the highs of December, the headline Nifty has corrected by close to 7%, and the broader market even more, and some sectors have felt the heat even more. So we wanted to look at the valuation of the markets as we get into the budget in the last 10 years, and what has been the market's return 7 days post the budget. Interesting empirical observation again. I would like to reiterate the fact that it's just an empirical observation. Whenever the forward, 1 year forward earnings multiple of the market has been lower than 20 times, the markets have always given a positive return 7 days after
the budget.
In the,
And
1 week return after the budget.
What's the
and
valuation
the current
right
valuation is about 18.5 times 1 year forward earnings. But that's just an empirical observation. It all depends on what the budget delivers, which you will get to know in a couple of hours. And let's hope for the best.
All right, that's the chart up for you. Market valuation now sitting at a number less than 20 times. Good chance, given the history, that the market would be in positive for next 1 week. That's what at least the trend analysis say, at least on the face of it. But with this, it's a wrap. Thank you so much for tuning in. But don't go anywhere. Coming up next is Opening Bell.
You know, the 1991 budget speech of Dr. Manmohan Singh is very often regarded as a watershed moment. Actually, it was a watershed speech, but it was